All right. Good morning, guys. Good morning. This is your boy Moses. Welcome back to FX Fabric. Today is another day. Today, actually, we are starting another week. Today is 10th of November. It's a Sunday, and as usual on Sundays, we break down the market to see what is waiting for us in the week ahead, and what should we expect from the markets. As you can see, we're looking at gold. I break down gold, US 30, US 100. Bitcoin and GBP USD well, basically. Yeah, so today we are beginning with gold. And for you guys in the US, welcome back from the elections. For those who are supporting Donald Trump, I congratulate you guys. Donald Trump won, and he is the next president right now. Though he has wild policies, we've seen how his election has impacted the market. Check out my previous video, guys, and see how his announcement as president affected the market. It affected all markets across, from currencies to metals to Bitcoin, actually. So if you look at all markets, he his election really affected the market due to dollar sentiment going up. But anyway, guys, let's dive deep into the markets. Let's go and see how what should we expect to see from gold this week. Right now, you're looking at the weekly graph. Let's see. And I actually removed all lines for me to be able to draw everything from afresh. So normally I start with my lines already drawn, but today I want to draw these lines fresh and show you how to really draw trend lines from the weekly time frame. You see, I'm only going to do this on gold, guys. On other markets, I have my trend lines already standing, so I won't waste time on them in order to spare time for this video not to be so long. But for the gold, as you can see, guys, this is an uptrend, and you can see it's been going on for like forever, literally. You can see since it started. I don't even know. This graph starts from 1997 due to limitations from TradingView. But as you can see, since then, since the 90s, gold has been moving up at has been in an uptrend for quite some time. Not just quite some time, for a long time. It only has a few dips here and there, as you can see, one, two, well, all of this I can count all this. How many years did it take? Well, when gold fell, I think this was the 2008 crisis, right? Actually, this is 2011, 12, 13, 14, 15, as you can see, and then we moved all the way up. During 2020, you can see a little dip here, a few weeks. You can see around 2020 here, a little dips. You can see due to the COVID pandemic, but still gold continued to go higher. And actually, that's one of the reasons gold even went higher during 2020. 2021, it leveled off as market started to stabilize. You can see, guys, 2021, we leveled off and entered some kind of a horizontal range, a ranging market. And then from there, we pushed out of it and then continued to the top. So let's draw some trend lines here and see if gold actually respects these trend lines. As you can see here, always begin from these lower points and see if the market respects them. If not, guys, don't force it, okay? Don't force it. Let's see here if actually this line can actually be stretched from the monthly, the way I see it. Let's see. Just a minute. I want to get something here. If it actually works out. If it doesn't, then we draw using the closest areas available. Holy crap. As you can see, guys, this is the monthly, and yeah. From the monthly, we managed to get out this line, which I don't know if we can leave, but I would take on anyway. I think, yeah, I would better leave this line here because gold has a tendency of coming back to retest these lines. You can see here it came and almost touched it No, this was the first time this line was stretched. You can see actually the first time it would have been here. You can see that it came, touched it here, and when it came all along to this place, you can see broke through it, and then the next time it came around this area, it rejected it immediately and took off. So I think I would leave this line here. This is a valid line. Though it crossed through it here, it's still valid. Let's go to the weekly and see how it looks like. Okay, so you can see this. It's okay, guys, if it looks like that. Okay, and what you should always remember is that you can draw up to 3 trend lines in one trend: an outer line, an intermediate line, and then the current line which the market is following. All right, so we've just stretched out a monthly trend line, and let's move on to the weekly. As you can see on the weekly, we can also stretch out another trend line here. No, I would leave this one and come around this point and stretch out another line here. Okay, another line here. Those are 2 lines so far on the weekly, as you can see. So every time we cross one trend line, we're always looking at another. Every time you have two consecutive points in an uptrend or downtrend, they can create a trend line. So, and from there, this is the weekly, and from the weekly, can we stretch out supply and demand zones here? Gold also respects support and resistance levels. For example, I can show you here. There is a resistance level here. I can actually place it around this area. I can I can place it around this area here. Let's place it here. Okay. And where else can we place? There is a support here. I'm only placing clear levels, guys. Okay. Let me change this to, I think, red. Red would be good, or maybe white. No, yeah, let's leave it white. Okay. So, well, those are the clear levels, guys. We can see from. Don't think of levels which are on there. Maybe around this area too. There is something here, and you can see the distance between them, that it's almost equidistant. Okay. So let's move on to the daily. And on the daily, what can we see? On the daily, yeah, we can actually draw out another line on the daily. How many lines do we have so far? Trend lines. 1. This is the monthly. This is the weekly. Let me give the weekly a different color so that we can differentiate them. I'll give it a green. Actually, let me give it maybe a blue so that the current line can be green. Okay. So we know this is a weekly, this is a monthly, and then on the daily. I'll end on the daily because I trade actually on the 4-hour and 1-hour time frame, but I follow trend lines from as you guys can see here. Okay, so these are how many trend lines? 1, 2, 3, right? Those are 3 trend lines, the major trend lines. I can say that if market crosses here, if it comes here and breaks through this area, what do we expect? We expect it to come back and touch this zone. If it breaks through it, then it's going for the monthly trend line. You can see down here. That is how trend lines work. Okay, but that is if you're a long-term trader. If you're just a swing trader who carries on a trade, let's say for a few days, 1 day, 2 days, still maximum trend line I can say you can look at is the daily and the weekly. Monthly, you can leave it in the background because it won't really disturb you. Look at how far it is. Why do we remove trend lines? Is because they make the chart dirty, and then they cloud our judgment. But in this case, if you look, this monthly trend line is quite far, so I would rather leave it there in the background, knowing that it is there. So anytime the market comes back and plays around this area, I know that there is a possible reverse around this area. The same applies to the weekly. The weekly, it's quite far, but look at how far this market is moving, you see. And then on the daily, we stretched out this line. I will leave it there because not many times the market comes and touches these lines. You see the first time it touched, let's see. Where are we? Yeah, we drew it from here, came, touched it here. This is the first time it respected it. Now the second time, we are waiting for it right now. And then from the 4 hours, you can still stretch out a line. As you guys, you can see, the lower you go, the higher the possibilities of you getting a trend line there, a mini trend line. You see, that is a short time trend line. And there is a rule of trend lines. It is called the 3 touches. We always look out for the third touch. To, for example, this trend line, we drew it from here up to here. When the market came at this level, it gave us a possibility to draw a trend line. 1, 2. Okay. On the third level is where we were counting on to do what? To place a trend line trade, as you can see, guys. So you could have stretched out a trend line here. Sorry, you could have got an entry here, perfect entry with a small stop loss here. You could have actually got, these are these are the kinds of trades you can get, a 1 to 10, 1 to 20. You can see, just following trend lines. On a third touch, we expect the market to take off, and once we've broken through the third touch, normally, actually, usually, on the fourth or fifth touch, the market breaks through and then comes back to retest back the lows. You see, so you look at what happened on the third touch. Sorry, on the fourth touch, the market came back here, made a small rejection. You can see here, made a small rejection here, and then broke through it massively. And you can see how it came back to retest this trend line. Very perfect retest. And then came back down. It's coming back down here, and I anticipate it to come and touch this line too. This was a daily. So let's see, what color did we make our daily? I wanted it green. Yeah, in order to differentiate it. So I believe this market is going to come back and retest our daily here and then continue to the top. You see. So let's move on to the next concept, supply and demand. Are there zones which have been respected for some time? We stretch out supply and demand zones from the daily, and we also move on to the 4-hour time frame to stretch out supply and demand zones. Guys, note that supply and demand zones many times coincide with support and resistance levels. Not every time, but many times they do coincide with support and resistance levels. And don't be surprised. Guys who say, oh, they are so different, they are not so different actually. The difference is supply and demand as zones, while support and resistance are like price levels that a market reaches there and gets rejected immediately. This is a pure supply and demand zone, as you can see here. Sorry, this is a demand zone. What is a demand zone? An area where buyers get in the market and place trades. Not just buyers. We're looking at big buyers, big companies, big banks like HSBC, Barclays Bank, JP Morgan, those big banks which have the kind of capital to move the market, as you can see. So this is a big supply zone, sorry, demand zone. And why is it very important? A demand zone is an area where this is an area where buyers believe that the price is very nice for them to buy. If you want to buy something, you always want to buy it at a cheap price. And if you consider a price that it's not just cheap, but it is fair enough for both of you guys, that is a perfect price. So this area is an area where buyers believe it is cheap enough. It is not so cheap, but it is cheap enough for the sellers to be comfortable to sell off their positions, for the buyers to acquire them, if you look at it from that perspective. Okay, so look at how many times it was tested. This makes the upper zone here a supply zone. Why? Because those zones there, they are where the sellers believe that the price is high enough for them to sell off their positions in order to take profits. You can see. And from the buyer's perspective, if he bought here, he believes that this zone is a good zone for them to offload off some trades, you see, and wait for the market to come back in their area of comfort, get back into positions after freeing up those positions up there, get back into more positions here, take off. But you can see many times it happens that these banks retest these areas. What do we call a retest? Retest is for them to induce more and more sellers. In this case, we are looking at sellers. If it is a downtrend, we are looking at buyers. So the buyers are inducing more and more sellers from these positions to release and free up those positions in order to do what? For them to be free. And once they free up those positions, look at and when it reached these levels, it got rejected immediately. Now, what is a rejection? That is the buyer stepping in, looking at this market being, this level being hit, and they're like, wow, perfect price. Let's get in. Let's get in with buys. So they did it once, twice. On the third time, they took off. 3 is a magic number in trading, guys. Never forget, 3 is a magic number. Look at it. It came once, twice, and on the third time, it took off. You can actually begin from here. 1, 2, 3, and on the fourth time, it took off. But if you consider it as at the third time, it took off. 3, why 3 is a magic number? Look at this area here. You can see this is, you can draw out this line and you can see once, almost touch it here twice, 3 times. The fourth time it took off. So guys, whenever you see 3 touches, let it be a supply zone, let it be a resistance level, let it be a trend line. Always be careful on the next touch. If you've made money off on the third touch, be careful on the next touch. You see, so that is one demand zone we've created down there, and let's see if we can draw out another one. Significant demand zones which have been respected. You see, I would draw out this one over here. There is this one around here which we didn't test it, but I would draw it still. How would we draw a demand zone? That is the zone, the sell before the buy. So we come here and stretch out, and where do we begin with? We always begin with, in this case, I will create a separate video actually to teach you how to draw these zones, okay? So guys, there are 2 zones here which are very relevant. There is one here, the sell before the buy, and we consider the beginning of that candle, the open of that candle to the close, and then we cover the wick of the next candle which took off. This is the candle which created the first demand zone, the first candle of the demand zone, and then the next candle which took off. You see, we take in the lower wick down here, and then that is a zone created. Okay, so there is another significant level here, because when you know supply and demand, we have what we call rally based rally or drop based drop. But there is also a drop based rally. Okay, what is a drop based rally? Drop based rally, you can see, guys. So drop based rallies or rally based drop, they are highly more significant than rally based rally or drop rally based. So guys, supply and demand is quite, I can't say complex, but it's quite deep, and we would need a separate video to go into it to explain what forms what, how are these zones formed, and how you can draw these lines. Okay, so this is another zone I would consider, and you can see how it has respected it perfectly well. You can see, so you can see how it perfectly respected it. So if you are to get into this trade, you enter here. Let me show you how you would trade this. If you anticipated this, if we had this already here, I would have actually a buy stop here, and my stop loss would be around here. Targets, I could target a 1 to 2, and I'm out. You can see, guys, 1 to 2, and you're out. You've made your money. What else do you need? But if you are trading on a longer time frame, I wouldn't advise to hold this trade for long, because there is a more significant demand zone below here. And as you look here, this this trend line has been broken, just broken, and it came back to do a retest, which it really respected. So there is a higher possibility of coming to touch this line. And coming to touch this line may mean actually having a massive wick which will come and take out this zone here before it takes up to the top. There is that possibility. So I would rather wait for this market to come back and see how it plays around this zone. If it rejects it the second time, then we are getting back in to go for a trade we are going to hold for a long time. This is a trade, if we catch it, we can actually flip an account on it because it can give us 1 to 10, 1 to 20, literally. So these are the most significant zones we are looking at. And let's see what else. Can we stretch out some support and resistance levels here? Actually, we stretched out this one. I would actually have stretched out another one here, but I don't want to make the graph very dirty. Let's wait for the market. If it comes down here, this is an obvious area I would look at. You can see here, I would look at this as a very significant resistance level. Okay, it actually will be a support because the market is moving downwards, and if we break through it and then come to retest it above here, it will return into a resistance. Okay, so let's move on to the 4-hour time frame and see if we can stretch out any demand zones here, because why do I call them demand zones? Gold is on the buy, like gold is on an uptrend, so I wouldn't be very desperate to buy it, sorry, to sell it. Okay, so this base here has played its part already, but that doesn't mean it won't do it the third time, the second time already, and even the third time. Okay, the other thing I wanted to draw out here was I think I could stretch out a flag here. So you can see how just using supply and demand, support and resistance, and so let me actually first draw this line and then continue. There was also this one here. Let's delete it. Okay. And guys, these lines here, they always follow them and respect them, because anytime you don't respect them, the market will give you karma, literally karma. Like it will come back and respect them for you, and you'll be like, wow, how I wish I left them. So from my judgment, I have a feeling, so you can see how complex this can get, that you have a lot of lines. That's why I prefer to leave these lines, draw them, and then put them in my head so that I can leave the chart clear. But you can see that here, why am I stretching out these two lines here? I feel gold is going to form a what? A flag here, a bullish flag, which it's already created one. There is a possibility of it coming back here on this X and then coming back down here to touch around this area before it takes off. That's what I feel throughout next week. Actually, I can say the first 2 to 3 days, it may come here and then come back here before it takes off. So you will see that it will come through this zone, and that's why I say there is a possibility of it coming and creating a massive wick here before, and it won't close into it, but then get rejected immediately back into this demand zone and then take off to the top. So completing this flag pattern. Okay, so that is on the 4-hour time frame. That is what we anticipate for gold. Let me actually draw a small line here and show you guys the direction of what we expect. So I expect this guy, there is a possibility of him going like this. Sorry, let me draw this line again. It didn't come up. There is a possibility of him coming straight all the way down here, you see, or continuing all the way here, as you can see, guys. And if we come to touch this area here, there is a possibility of coming back here. Of course, we shall play around this area, but coming back here, you see those movements there, right? Playing around this area and then taking off, you see, back to this zone here. So something like that, I expect something like that. But don't be surprised if we come and first touch this area here for a second retest, because what you should know is that markets, whenever they break a trend line, they can form a second retest, and a second retest means a second touch around here, and then coming all the way back massively to this area here, come back here, retest this line here before it takes off to the top. So that is what I see in gold, and we don't know how this will play out, but let's see if it plays out the same way. You can take a picture of this and check out how it plays out next week, and let's see if my analysis was correct. But for gold, let's get this clear. No matter how this plays out, always follow price action And if this market decides to take off immediately all the way, break through here all the way to the top, don't wait for bells, guys. You are looking at an uptrend. Gold, we are looking for buys. If you can scalp on a sell, well, thank God you've got it. But I wouldn't hold long-term trades in gold in a sell. I would still be looking out for buys. So anytime we come around here, I would look out for a buy. Or if we come back and reject this level, there is a possibility of rejecting this level massively and then taking off straight to the top. So I would still look for a buy. Actually, if we reject this area, it's a good position to still get in, as long as you have a good stop loss, which has to be below around this area here, you see. But as I told you, there is a possibility of coming all the way, forming a wick here, and then taking off to the top. Okay. So guys, that is good for you today. Don't forget to leave a like, subscribe to this channel, and always look out for my new videos. I always break down these markets and give you an update. And also, don't forget to check out my channel description. You'll find links to my contacts, my Telegram contacts, and you also can find a link to my Telegram channel where I give sniper entry signals. You can trade with us, make money with us for free. Actually, that channel is for free. So every trade I place on my real account, I post those signals in my channel. So guys, you can trade with me. And if you have no time to trade, well, sorry, but instead of being sorry, I can trade for you. All I need is access to your MT5. I don't need access to your funds. All I need access is to your MT5. I trade for you. We share 50-50 of the profits and then move on. Okay, so that is it for today, guys. I wish you a nice trading week. Be very careful. Market is going to be quite volatile throughout these weeks till Donald Trump is sworn in. So throughout this, and we're actually approaching holidays, Christmas holidays, even before then. So I would look out trades to make off money to take me throughout the new year. Okay, so guys, follow me and let's continue trading. Okay, have a nice trading week. Bye bye.